72. Support at 63, 55, 45, and 38. Resistance on the upside at 81, 88, 96, 45.04. Pivot 72, resistance at 81, 88, 96, 45.04. And support below at 63, 55, 45, and 38. All right. Well, it's a new day here. Let's see what the day brings. So we welcome some of the new folks that are here. We are trading mini S&Ps, looking to take advantage of ebbs and flows in the market, trying to find these inflection points to give us an opportunity to scalp the market based on the price action opportunities that we have and the levels that we have. And right now, with the volatility that we're at, we're probably looking to about 2 to 3 points on our trades here. Unless we start breaking down to the downside, I think the more volatility would start picking up here. So that's what we're looking at. Last week and the week before, we were at 7 or 8 points with our stops and our profit targets. And right now, things have quieted down a little bit, and the market is quieted down a little bit. So we are back into the probably 2 to 3 point range. But that could change at any time, so you never know. All right. So again, if you have any questions, feel free to ask in the chat box. If you look at the chat box area, you'll find the levels there that we gave out this morning, and they are there to kind of guide us through the day, kind of help us along the way, looking for opportunities, areas of importance that we feel the market might give us an opportunity here to scalp off of. That's what we're looking forward to do here. And about, again, with the volatility the way it's at right now, and again, that could change. We're probably about 2 or 3 points on our trades here. All right. Let's see if we have any news coming out this morning. Yeah. Nothing that's going to affect us during our trading day. We have a 3-year note auction coming out there at noon, but that's a 3-year note auction. All right, so we're just kind of, again, yesterday was kind of slow. We still had, we like to average about 4 or 5 trades a day. Again, that's what we are looking for to average. And that could change with the volatility at any given time and moment. Things change, opportunities changed, markets changed. It could change intraday. It could change weekly. It's different times and areas when the markets, fluctuate and volatility fluctuates. So patience is important. As we kind of kissed off we were trying to make a push up, and now we're pushing down here a little bit. First level on the downside we have is at 63. Kind of quiet morning so far, just kind of trying to figure out what the market wants to do. So very, very, just kind of be patient here and wait. That first bar, usually a little bit tricky as far as volatility. You never know which way they're going to go. They rallied it, then they broke, and they're breaking it. So kind of hit or miss as far as what the market's going to do here. And so patience is important. Kind of coming back here to our pivot, very, very quiet. Nothing too great one way or the other. Yesterday, I kind of did the same thing, traded on both sides of our pivot, so patience is important. And again, we like to average 4 or 5 trades a day. We don't know if we're always going to get that, but we like to average that. I think average is a good term. I think we definitely do average that. It's just a matter of, you have to, which day you're here and what volatility we get at any given moment in time. And if there's any news coming out, there was a whole bunch of news the week before with the Fed doing what they're doing and not doing what they're doing, and things are, coming to a level here where the market's consolidating a little bit and trying to figure out what it wants to do next. So again, if anybody has any questions, feel free to ask in the chat box. Don, if you want to hop on today, as please, more than welcome to. And tomorrow you'll be handling it for me the rest of the week, and on Monday. All right. So we're right here at our pivot, very neutral. Can we repeat the levels again in the chat if that's possible? It'll be fine. There. Thank you, Don. All right, we're just kind of hanging around our pivot here, so very, very quiet. That's only, there's one extra 4 there, but the pivot is for 44.72. All right, we're coming back up here. Maybe they want to go retest the highs there. We got 81 as our first level of resistance. All right. Again, if anybody has any questions, feel free to ask in the chat. We are scalping mini S&Ps here, looking for opportunities to scalp the market. Right now, with the way the markets are trading, probably about 2 or 3 points on our trades. At any time that could change. And so we have to be aware and on our toes for those changes when they present themselves. Do we know when they're going to change? No, we don't. I wish I could tell you, this bar here is going to create some crazy volatility. Be too easy then. And now we did get up to 79 earlier there, so we still had 81, still doable. How you doing, Don?
I'm doing good. Yourself?
Pretty good.
Is it warmed up there?
Yeah, it's supposed to today, a little bit today. Finally, yeah. But can't complain. Still for Chicago. 30s is good. They're looking for a warm up. We're going to get to the 40s and rain. What are you laughing at? It's 40s and rain. The snow's going to be gone.
You're the big dog, can live in that climate.
Yeah. The 40s and rain, the whatever snow we have around here will be gone. Good morning there, Sam. How are you? We are trading mini S&Ps here. Trading, looking for opportunities to scalp the market. We're trying to find areas of inflection that create opportunities for us to scalp. We gave out levels this morning, and if we can repeat the levels in the chat, you'll see them there. Those are areas that we're going to focus in on to try to give us those opportunities to trade, in addition to price action opportunities. And the combination of both gives us our setups. We're looking to trade about 4 to 5 trades a day on average. We've been averaging a lot more than that lately because of the volatility, but it seems like they've sucked out some volatility lately. So trading more in a little bit of a range, but consolidating here a little bit. So, but that's okay. Nothing wrong with consolidation, trying to figure out which way we're going to go next. And then we'll see what happens from there. So if you have any questions, feel free to ask in the chat box. We scout, we focus more on the morning hours to give us our opportunities to trade. We feel there's good ebbs and flows. There's good dynamics. The traders, the volume, all those things that are in the morning create our opportunities for us to trade. So we're geared to the morning hours than we are in the afternoon. The afternoon gets a little bit more one way. The dynamics of the trade is totally different than they are in the afternoon. I hope you're ready to put in some numbers and do your gig tomorrow.
About as ready as I'm going to be. I try not to get too anxious.
Oh, please, you can do it with your eyes closed.
And, it's not picking the numbers that bothers me. It's kind of like, if I pick them, I'm kind of like what you said, you've got to have faith in them. And, I have faith that these numbers are going to bounce. Mm-hmm. And if I'm wrong, I get out. Mm-hmm. It's that simple.
Yeah, I mean, that's all we can do. I mean,
yeah,
there's no great logic to this, except for the fact that we're trying to find opportunities for us to, that we feel are good opportunities. And well, we're not always going to be right. If we were always right, this would be too easy.
Yes.
So basically it comes down to discipline and patience and, making sure you get stopped out instead of letting your losses run.
Yeah.
And then that way you always have another opportunity for next trade. I mean, the phrase that was always used, when we were trading was, you got to make sure you're coming back tomorrow, because that's, because we're all going to have bad days. I mean, this is part of the game here. And, the fact that you don't want to get blown out to the point that you can't come back tomorrow, because tomorrow's always going to be a new day and you get a fresh look at it. The market might do things a little bit, the way most of the time they're going to do the things that we expect them to. There's always those outliers that those days that the market has its own brain, and that's fine. It's okay. It's allowed.
It's not doing what I'm seeing that it should do.
Right.
And I'm trying to approach it from that standpoint. Says, okay, this is what it's going to do today, because that bites me.
Right. Yes, we've tried to talk to you out of that many times.
Yeah. Well, I'm talking myself out of it. So.
But again, it's not only everybody does the same. Everybody has the same. They come in with some idea, some mindset, some thought, and that's it. That they think that this is it, and but it's not. You have to come in with a clean. No opinions is what we always talk about here, and that way you give yourself a fair chance, because the market's not fair to us. I mean, just because we have an opinion doesn't mean the market's going to comply with what we think, and it really doesn't care if if we're right or wrong.
That's right.
It does not care.
And so it helps to have a little bit of an idea, but when you have to realize that when you're wrong, get out.
Mm-hmm.
Know where. I tell everybody, I says, most important rule is know where you're wrong.
Mm-hmm. Yeah, for sure. Yeah, you can make sure you get out and sometimes I let the market kind of tell you. You look at the charts and let the charts tell you where you're wrong and put your stops in place.
Yeah.
And if you're looking at the money side, I mean, we focus on 2 to 3 points, which is good. But if you can focus on, letting the market tell you where you're wrong, and that'll be better. So some of the things that we're talking about here, Don and I, are some of the psychological aspects of trading that we talk about in our education course, that we focus in on with each individual, because everybody has their own deficiencies in trading. I have mine, Don has his, and we try to figure out what yours is and try to work with you to try to get rid of it, just tame it, because you're never going to get rid of the bad habits. They are always going to be there, because they're just like, we just can't do anything. Can we explain how to use support and resistance? Well, support, would be areas that we think that the market would go down to and bounce off of, because we feel those levels are areas that the market will rally off of. And resistance areas are the opposite, where they are areas that we feel the market might go test and come off. All these areas are areas where we feel the market might test and rotate off of. And the rotation that we're looking for is about 2 or 3 points today. We were at 7 or 8 last week or week before because of the volatility, and then we dropped it down to 4 or 5, and yesterday was 3 or 4, and today it looks like 2 or 3. So volatility comes into play every day in the markets, and so those are the unknown factors that we have to kind of determine on your own. So that's what we're looking for. We're looking for areas of inflection against buy areas and sell areas. That's what support and resistance are. In addition to price action opportunities when the market paints some bars, there's some dynamics that are created with levels that the market creates intraday that creates opportunities for us to buy and sell as well. So the combination of those support levels and resistance areas plus any price action opportunities gives us about, on average, like I said, 4 to 5 trades a day, but definitely more than that lately, because of the markets have been so moving around quickly. All right. So that's what we do here on an everyday basis, and we're just kind of not really doing much right now. We're just kind of floating back and forth.
Well, is your little buddy back from vacation yet?
I don't know. I have to give him a call today and see what's going on. Did you ever hear of The Power of the Dog? It's a movie. Has 12 Oscar nominations today. I never heard of it. Have you heard of it?
No.
Never heard of it. Power of the Dog leads with 12 Oscar nominations, including Best Picture.
Now, I've heard of The Power of the Big Dog.
Okay.
Your label, brother. Might as well go with it.
Yeah.
I hate it when we ought to be going up, we ought to be going down at the same time. It's kind of like, I know it's going to hit one of them. I'm just not sure which one.
Yeah, I mean, this is we talk about this all the time too. This is like I call this a no trade zone. So patience is definitely important in trading, and sometimes we are by now we've had 5, 6 trades a day last week, but not today. And like I said, we like to average. This is the tightest range we've been at in the morning for a while, which is nothing wrong with that.
I tell you what, that late afternoon trade has been wild.
Yeah, it's late afternoon, the last hour. Yes,
Yeah.
it has been a little bit crazy. They seem to just go one way with it, and they've had some. And then when the market closes, they have some crazy moves also, like at 3 o'clock, right after 3 o'clock. And that because this is earnings season and some earnings are being released. So that's what happens there. All right, support level on the downside we have is down here at the 63 area. So we're going to hit the upper levels. Now we're coming back here. Probably rotate back up to the middle and kind of hang there. So again, if you are looking to trade futures, equity futures specifically, but any kind of futures, and you've dabbled with it in the past, and you're here, like what you hear, we do have an education course that helps you with learning how to do this stuff a little bit, at least one idea. There's many ideas out there. I'm not saying we do the right thing or perfect thing, but it's one way of trading. And there's multiple ways of trading. I don't know what the right way is for you, but this is one way that kind of we try to minimize the risk here a little bit. We're not trying to hit home runs. So it's kind of what we try to do here on an everyday basis.
Okay.
Yeah, that was fun.
Yeah, it was.
Yeah, bottom down there.
Yeah, about the 66s.
Mm-hmm.
I was looking for 72, but 71 looks good because that blue band is sitting at 72.
Yeah, that's right. The blue band is sitting right there for you, Don. You're starting to notice that more often.
I'm telling
It's
you.
amazing what it's done to your psyche.
Just noticing it has increased my bottom line.
Yeah. you stop being stubborn, right?
Yeah.
And we talk about day trades as well as price action trades. The blue band that Don was suggesting is one trade that we look. There's times when you have to use that, times when you don't. So it's not always a perfect situation. Times when it's more riskier. We try to explain those opportunities for you. Then you have to make those determinations on your own, whether you're going to jump in or not. The goal of our education course is for you to make decisions on your own, independent of anybody else. Well, we're coming right back up here to our pivot, so kind of not doing much.
It's amazing how much that blue band comes into play.
Mm-hmm.
I mean, even when you're doing technical analysis on something else, you turn around and look, you say, oh, this is a number. And there's the blue band sitting there.
Mm-hmm.
Going,
yeah.
Okay.
You just have to accept it. Just
Yeah.
don't have to fight it. If we can learn to accept things without understanding why, sometimes as long as it works, that's nothing wrong with that.
Well, if I could learn to trade it, it's I'm just not very good at taking it because, like, then we ran through it.
Right. You got to definitely. It's at lately it's been the markets have been so fluid that they move around very quickly.
Yeah. And we've been all over it this morning.
Yeah. What does it mean when you say the blue band? Well, the blue band that you see on our charts, it's a Bollinger Band that you can get with most charting services, and it's just an average that they put together with some kind of mathematical formula that we kind of use to our advantage here when we are trading. We are definitely range bound here. Very, very quiet. Yeah, I mean, you're talking about the blue band? Yeah, you don't when it's kind of flatline like that. There's no advantage. There's an advantage to it if you have a position and it comes up to it or down to it, and that's where I would get out. Whether it goes through it or not, irrelevant.
That's the truth.
You just have to respect it, and if you can respect it, that's fine. And that would be like a target area. So if you have a position and you're looking to get out, that's where you would kind of focus in on. But as far as trading it, initiating a trade with it, with the way it's kind of flatlined like this, and the market's going on both sides of it, not really a initiator of a entry point for a trade.
Yeah, it's taken me a while to realize if my target's on the other side of that blue band, I need to just bail that sucker.
Mm-hmm. Yeah, it is what it is.
Yep.
All right, one of those quiet days. There's not even any fundamental news that's going to be released. It's definitely one of those. They're waiting, saving all the energy for when I'm gone and you're here.
What do you have any news that you can tell me about now that's going to be out?
Well, Thursday is CPI's inflation number.
Okay,
Thursday morning.
It's at 7:30.
7:30. Yeah,
Okay.
So that'll be already out. That's what I think the market is kind of waiting for. So Thursday is the day that the market's kind of hanging around waiting for, I think. But then, like you said, the late afternoon trade is vicious. It's funny how me and you say let's not trade in the afternoon, and we're both watching it.
I was trading it. It's just kind of like I was fighting for that 71 yesterday. Then it went to like 72 something. Then it turned around, and bounced off.
Yeah, I know.
All the way to that new high.
So I had my order in yesterday afternoon at 72, and it got down to 2.5, stopped and rotated at 10-point rally.
Yeah,
That really kind of pissed me off a little bit.
and
I had that from the morning.
Yeah.
I left it all day, and and then when I saw it break like it did, I was thinking, oh, okay, I'm going to get these now. So I walk away and I come back and I look at it and I'm like, you got to be kidding. I missed it by 2 ticks. Oh, my God, good. I'm glad I wasn't here to get frustrated watching it. Of course, when I walk away with a position on my computer, I always have my stop in place as well. So it's not like I'm walking away not understanding my risks. So you always have to make sure your stops are in, especially if you walk away from your computer and you leave an order in the order book. One of those things you learn. If you don't, you'll learn the market will teach you very quickly. You didn't put your stop in. Now now look.
Oh yeah, it gets worse.
Yes, it gets worse. Yes, that's it. That's a key. It gets worse before it gets better, and it ain't gonna get better until you get out.
Well,
That's true.
It takes, if you live by those rules, it sure takes a lot of the psychological burden off of you.
Mm-hmm. All right, now we're coming down here to 63 really quickly. Have a nice quick rotation here, and giving us our nice little 2-point rotation here against the 63 area that we were looking for. So nice little pop here off of the 63. This time we got all the way down to 62, so nobody can complain that it didn't get filled. And you got a quick rotation there to the 65. Remember, we're doing 2 or 3 points right now. That did not take but a half a minute, or even less. So hopefully some of you were able to jump in. And even though the market's going down, we were able to get in and get out. We said 2 or 3 points. We got up to the 65 and change up there. And now we're rotating back down here again. Again, this is kind of, we never know this was going to happen, but we have to act quickly with our trades, react to the market. And all of a sudden we're breaking. We had this big range. This in 1 minute we had our bigger range that we've had is in the last 30 minutes. So you just never know. Maybe there's a number that came out here at 9 o'clock. I didn't have it, so I looked. I did not have anything that was supposed to be released. So I don't know what created this volatility. Looks like it was a number, but like I said, the order book did not thin out. So, but it did quickly rotate to 63 and then pop up to 65 and change. So hopefully you're able to get out. And now we're looking at the next level. The downside we have is down at the 55 area.
It's scary. We got the same numbers.
Oh. Well, I had a good teacher.
Yeah.
All right. Again, coming down here to the 55 area now. Figures. Goes down to 56 and a quarter. Stops. Still in the same. And then see what it wants to do now. Again, we never know when volatility is going to, jump in and bite us. You just have to be ready to trade it and take advantage of the opportunity when it's there, right? I mean, we were very quiet for a half an hour, didn't do anything. And all of a sudden, we extended here a little bit, and who knew that this bar here, which we're still in, is going to create the same, some volatility here. Again, it was at 9 o'clock. I didn't have any number coming out. It seems like there must have been something that was coming out. Do we always know what's happening? I wish I could tell you I always knew that this was going to happen, but we don't. We try to stay away when we know a number is going to be released. And I usually have a list, and I looked at it, and there wasn't anything out. So we try to stay away from trading those levels. Those numbers when there's those times, I should say, when there's a number being released. All right, so again, we went down to 63 and a quarter here. So the 60, we went down to 56. 56, sorry. Yeah, we're looking at 55. We went down to 55 and a quarter here. And if we don't go down and we close this bar here, the 55 is a little bit more tenuous. We get on at 8:30 Chicago time, Central time. So right before 8:30, right before the market opens up. The market opens up at 8:30. We're on it, right before, and kind of give you the levels. We can repeat the levels for in the chat. If any of you came in a little late and you want to see the levels we have, we'll put the levels up in the chat. There they are. Those are the levels we gave out this morning. And again, we can add to them, tweak them. Like we're going to tweak the 55 right now, telling you that because if you didn't get the 56 and a quarter, which probably you didn't, only 9 lots traded down there. The 55 is a little bit more tenuous. So if you're a little bit more risk averse, you're not going to play the 55 area. If you're gonna, we try to explain the risk to you so that this is an area right now where the 55 is a lot more dangerous than it was, 5 minutes ago, only simply because the market put a price action. Did not give us that opportunity when it drifted down there just a few minutes ago, and consequently, right now the 55 area is a lot more riskier. Now, where you get in, if you adjust a little bit lower, that could help you a little bit. And if you're more risk averse, then you just wait for the 45 area on the downside. That'd be your next area of that you would be focused in on as our next support level. No, that is just an area. The market was trading on both sides of the 72 earlier, so we didn't get in. We have to wait for the market to kind of give us opportunities to get in, whether they be on the long side or the short side. So we need to have reasons. We employ a lot of reasons in our education course, so that you understand why those reasons would work, why they wouldn't work, what we're looking for with them, so that you can create a better opportunity to try to scalp the market versus just, well, we're below the pivot and that's where I should have gotten in. That's if I knew we were going to break, if I knew in the last 10 minutes we were going to have this big rotation here to the downside, I would have shared it with everybody and we all got short, all made a lot of money and all gone home. But I didn't know. I wish I could have told you that. Just sometimes you just don't know, right? I wish I could have told you that was going to happen. So yeah, no, we are just waiting for opportunities. We had a little scalp against our first level of support there at 63, where we bought the 63s. It rotated back up to 65 and change. We're looking right now for 2 to 3 points on our trades. We bought it, got out. Then it proceeded to go down to this 56 and a quarter area where we were looking at 55. So we missed our entry point there by just a little bit. Maybe some of you scaled in and got it. Maybe you didn't. I don't know. All depends on your risk tolerance. Everybody's got different risk tolerances here. So all right. We put together a trading methodology that explains why you'd get in, why you wouldn't get in, try to explain the risk involved with some of these trades, or try to find the areas that these levels that we gave out, why you would use them, why you wouldn't use them. And, the goal here of the course is for you to find these areas independent of myself and to try to trade independently of myself at any given moment in time. Can we repeat the levels again in the chat?
Yeah.
There they are. All right. All right. Well, we floated back up here. And now we're going to see what we want to do up here. Again, nice rotation off of the, well, we had 55. We got down to 56 and a quarter there. So kind of just missed some of our entry point. Well, missed my entry point by a tick, unfortunately. But that's how it goes.
Hey, I got a question for you. Your years of watching the price action, do you feel like you're trading before the indicators react?
Well, I mean, you have to for a couple. Well, you have to remember that I don't look at indicators.
Yeah,
So,
I mean, like moving average or anything of that nature. But
no, I mean, no. We're the last. We're the last ones to know.
no, I'm talking about. I mean, you put a trade on, and then because you have to have data there before the indicators can calculate. And I'm already in a trade before the indicators even are going. I'm going, okay.
Right. Well, that's because. Well, here's you have to remember. That the technical analysis that we do, and and this goes with everything. The technical analysis is always going to be at the forefront, and then the fundamentals catch up. Okay.
Okay.
The opposite occur when the fundamentals are leading, which is after when you have
News or something.
news or the Fed does their thing and the fundamentals lead, or pandemic situation, and when the fundamentals lead, then you have crazier markets, and whatever indicators are there, they're going to be flying all over the place. So so you have to understand that. And to me, when you put on a trade sometimes and you get into a good area, then you can just ride it along, because the markets will just, then the indicators will catch up. So to tell you that I know it's going to happen, or that I know it is happening when my trade is on, you're not really thinking that way as a trader, because you're looking at your position and you're figuring out, where you're exiting, where you're entering. You're not really thinking about the indicator, or you're not thinking about the fundamental news that's being released. You're just trading the market because you have a position on, right? I mean, when you get your position on, you're looking for your exit strategies, and that's what you're looking for. And then you find out later the indicator caught up to what your position was, and you're like, wow, this was a good trade. I mean, that's I mean, when you're in the midst or middle of a trade, you're not, you're not thinking, and you don't really care about indicators. You're just trading. And then, like when I was trading on the floor, and there would be some news that came out, some volatility that was injected into the market. Like, I would never know why the market started moving. And then, maybe when things settle down a half an hour later, then some people start talking, you get the desks to start telling their broker who's standing on the top of the pit, why the market was doing what it did, because there was some news that came out, and then that news kind of filters into the floor, into the pit, and then we figure out, oh, that's why the market did what it did, half an hour ago. But in the midst of it, you're not caring.
Yeah.
You're not really thinking about it. You're not caring. You're just trading the price action, the market volatility. You're looking to see, do I have to increase my stop? Do I increase my target? Do I keep my stop in place? Where technically am I getting out? Those things become more in the forefront because you're not. You're not really, not considering, why it's happening.
Yeah. I don't have enough time or brain power to consider why. I'm doing I'm just doing to get in.
none of us do. There's no reason to, and we are not going to move markets. So why do we need the brain power to think about it? We're not, even if you trade 100 lots, you're not going to move markets.
Yeah.
It's an influx of trades that come in from the institutions, from the big players who are trading thousands and thousands of contracts that are going to move the markets. And usually they're, I want to say programs, but I guess algorithms or whatever, they all kind of do the same thing at the same time sometimes. Yeah. And that's why you get some crazy moves, right? You never know.
Yeah.
Never know. There's some way to see the players that are in the book. It would be nice to see the players that are in the book. I mean, if you could say, oh, Goldman is selling or buying a whole bunch of stuff, wouldn't you want to do the same thing? Okay. So do you think that they would show you? You think they're going to tell you? And so consequently, do you think that they're going to put that in an order book? That they're going to say, hey, oh, this is what Goldman's doing, so let's jump in. I mean, the last thing that they want to do is tell you what they're doing so that they can make money. I mean, there are some players that you want to follow, right? I mean, I pick Goldman because they seem to always know what's happening before they know what's happening.
Yeah.
But it doesn't mean that it's always the case. But what I'm saying is that the order book, the way they put it together, is supposed to be has anonymity in it, so that you don't know what trades Goldman's putting on or what trade Don's putting on. I mean, we would all like to follow Don. I mean,
we'd all be at the poorhouse together.
If you knew what Don was doing every day, you'd be like jumping on board. Right? So, yeah, I don't think the exchange knows. Well, the exchange might know only because the orders, but reality of it is, most of the people who do know are the IT guys. I don't think the IT guys are going to be trading. Right? I mean, I'm guessing. I guess they would know, but it's not like they have to tell them. But, all right, we zoomed up. They got everybody short there, and they zoomed it all the way up. all the way. Got everybody short. They zoomed it all the way up to 76 area and come right back down. Kind of again, kind of in a little no zone here. So both sides, again, this is where it's trading, again, both sides of our pivot. Something came out at 9 o'clock that created a little hiccup done to the downside. It would have been nice if we got the 55 area, but right now, especially with this rotation back up here to our pivot area and above, if we go retest that 55, a very, very risky level right now, much more riskier than it was even 10 minutes ago, where maybe you would have retested and you would have maybe entered 56 or something like that. But right now with this new rotation up here to these above the pivot, it just kind of makes the retest of the 55 definitely a lot more riskier.
I'm surprised they didn't pull it back to 70.
All right, there, you too there, Philip. Again, we do focus more in the morning hours, so that kind of gives us our opportunities in the market. We're right here at our pivot again. So again, we are very neutral again. Wish we would have known it was going to rally from 56 instead of 55, right? I mean, I had 55 and who knew? I was off by just a little bit and I didn't even get my scale entry point. That's even bumming me out. Did you get in there, Don?
Yes, I did.
No.
Of course, I had to get the 61.75s.
Yeah, I told you I missed it by a tick again.
Yeah.
Isn't that fun? Ain't that fun to miss the low by a tick again? One tick.
I was sitting at what's half a point off with that low yesterday morning. It run down, stopped a half a point ahead and took off. And I'm going, this is not right.
Right. Yeah. Again, you always remember the ones that you missed, and then you never think about those ones that you got perfectly, and because that's supposed to happen, right? You're supposed to get filled perfectly and take no risk, and it rallied to 10 points.
I was reading something yesterday, and it was real interesting that traders get together not really to discuss what the market's doing, so to speak, as they are telling about their experiences. And what they find out is they've all are having the same experience, so they're just coming about it in a different way.
Yeah, I mean, and not only that, but the temperament. Everybody's got different temperaments, So, I could talk. I some of my best friends on the floor that I had and I still have are they traded in another pit because you couldn't. That was the hard part, is to trade with somebody and befriend with somebody who's standing next to you. That's hard to do. So you can't. But then they traded their own style and their own system and their own methodology, and they had their own little thing. You don't talk about how I traded or how he traded. You just talk about, what numbers coming out, how it affected the market, and maybe what somebody else was doing on the floor, like what another broker was doing or another trader did, or some crazy thing that happened that shouldn't have happened. But you never talk about the style, or how I should have traded that level, or how she did and how he did. But I tell you, the one thing is that I couldn't trade. Uh, and my better friends were not standing next to me. Let's put it that way. And you can imagine. I mean,
Yeah. I'm going to take your money.
Yeah, exactly. Exactly. That was the problem, right? I mean, you're gonna. That was the problem. It didn't lead to good camaraderie if you put the trade on and you made money on him because he was getting out. He had to get out because his stop got this is where he was getting stopped out, or in his mind he was getting out, and I happened to get the other side of the trade, and that was the low or the high of the day because he needed to get out, right? And I make money on it, and he got killed on it, and so that, and he's upset. Not that he's upset he traded with me, because he would have got out with somebody else, but I got it, and he knows I got it, and I made money on it, and he knows I made money on it, and he got killed on it. So we just keep it to the point where we're just not going to trade with each other. That was anyway. That's what happened. So
growing up, my grandmother, they were coming up in the Depression years, and they had like a little grocery store and a mechanic shop. She always would tell me the worst people to do business with is friends and relatives.
yeah. It is. It's tough because you're trying to be nice, and when it comes to money, that's a tough part.
I got tickled at they tell the joke about this guy, they were talking about tithing in church. And he says, I tithe. They said, well, how do you tithe? He said, well, I go outside and I take the money and I throw it in the air. And what the Lord wants, he keeps, and what falls back is mine.
Oh my goodness.
Said, yeah.
That's hilarious. That's a good one. Okay. All right. Well, we at both sides of our blue band, both sides of our pivot again, kind of very nervous little market. Doesn't really know what it wants to do. And again, there's nothing wrong with the market consolidating here a little bit, so it's just doing its own thing here.
I wouldn't anticipate us hitting that 55 again or retesting that 56. Would you? But
right now, again, I don't know. I just know that it's a lot riskier now.
Yeah.
Going back down there. So I would be very careful if you're going to trade it in your smallest amounts of contracts. If you're going to trade it, adjust the lower end, then keep your stop in place. If you're going to trade it at all, it just seems like if we go down there, we could easily flush right through it. But doesn't mean that it will. It just means that you have to be a little bit careful. And like I said, trade it. If you're going to trade it, adjust your trading a little bit. So trade it on a smaller scale. You don't have to trade it your normal size or your normal way you're trading. Maybe just, have a tighter stop, something to make it a little bit different so that if we go retest it and it works, at least you're in. And if it's not, then that's fine. You gave it a shot and then move on.
And I hate it when I miss them by a tick.
Tell me about it.
Seems like I'm a tick off today for some reason.
Yeah, well, sometimes I'm a point off, so.
And I like that 64.
All right. Again, market just kind of going nowhere fast. It's basically just staying in this little range. And well, it's not even little, but it's just floating back and forth in this range.
There's that blue band again.
You are going to have be so lucky that it's going to be you and Brad the rest of the week.
The Blues Brother.
Oh, you got glasses like that too now?
No, I'm going to give me some sunglasses and
That's
put my
right.
camera on.
There you go.
Sunglasses and cowboy hat.
Oh, you need to get that for Brad. Well, he's got the sunglasses. He beat you on that. He needs to get the.
Do your eyes bother you after you spend all day looking at these screens?
No, I mean, I'm not in a. No, I got my lights are on around me. It's bright around me, so it's.
Yeah.
If you had just your screens there and that was the only thing you were focused in on, I could see that it could hurt. But I have lights all around me, so it's not like I'm just focused in on the screen. So, but not mine. I try not to look at the screen so much.
But you're just on two monitors, so aren't you?
Yeah, that's all I got. I don't have.
But you got 232s?
No, 27s.
27s, okay.
I don't have a house like you, man. It's that big. And I can't fit all that stuff in 232s. What are you talking about? It's like it's a big 64-inch screen in front of me. No, thank you. No, I just got it. Even mine is too big. I had 24s on the floor. That was fine. Fit in the cubicle that I had.
Yeah.
But
I had to build me a platform like a semicircle around there to stack all my monitors on.
yeah, that's what the big traders do.
And just what I need is one of these Star Wars command modules where your mouse is in your armchair, where you just sit back and you just turn from side to side. And,
right, kick up your feet, just kind of.
Hey, buddy.
Yeah, I can see that. Yeah, there was a big move there, Patrick. At the end of the day, it's been happening a lot, and usually right after. Well, there was a big move on the downside right before 3:00, and then followed by, I guess, assuming some kind of earnings report that came out after the close. But yeah, that's why we talk about the dynamics in the afternoon trade are totally different than the morning trade, and we definitely try to stay away from that kind of volatility because it's usually one way and doesn't give us good ebbs and flows, especially when we're trying to find areas that we think would give us a chance to trade. Now, we did go down to that 72 area, which we had. And so if you were going to do anything, you were trading the areas and keeping your stops in place, but that would be about it. The price action opportunities in the afternoon are totally different than the morning opportunities. All right, market really is kind of just kind of drifting around here, trying to figure out where what it wants to do. So kind of be a little bit patient here. We tried to, you know, pick your spots. You definitely have to pick your spots when you're trading. There's no doubt about that. And especially since they've sucked out some of the volatility in the market these days. Well, today it's been very fluid lately. So taking a breather. Nothing wrong with taking a breather, right? It's good for everybody. All right, we are just kind of hovering here in this little area. We don't know which way it's going to extend, one way or the other.
Man, I walk away and this happens.
Yeah, we are just kind of floating around here, kind of going nowhere fast. It's just one of those days. Nothing wrong with that.
We need to blow on through that blue band.
All right, coming back up here to our pivot. So kind of going nowhere fast. It's just been one of those days today. We're just flopping back and forth here. But we did hit our levels on the downside there at 63. We had a nice trading opportunity there. It was very quick. Then we drifted quickly down to 55. We got down to 56 and a quarter and then drifted back up. Some of you did get in, depending on what your scale is, and some of you maybe had 50, did not. And if you didn't, that's fine. And then just be careful down there if we go retest. Upside, we still got 81, still doable. And well, we'll see what happens. Hey, Dan, I have to go upstairs for just a second.
Okay.
I'll be right back.
No problem. Okay, guys, he's gone. We can talk about him. Boy, isn't that the truth? I like days like today. So when you get into a trade, it's almost going with you instantly, and you're not sitting in some drawdown. Your entry was at the right time in the right spot. Sure makes trading simpler and easier on your psyche. That's for sure. And we traded back to our pivot. Yeah, it looks like we're heading up to our 81 area. Yeah, there's our 81. I think we're going to run through our 81.